inflation in action, just go to the grocery store or take note of the Dollar Tree that after 35 years is raising prices on most products from $1 to $1.25. If your wealth does not grow over the rate of inflation, it is effectively shrinking. Added to that, the stock market volatility has also captured our attention. During times like these, many investors look to flee to the safety of gold. But is gold really a good investment? Let's take a look at the last 40 years or so. Over this time, inflation, as measured by the Consumer Price Index, went up 3.7 times. March 31st, 2022, gold closed at $1,936 an ounce. January of 1980, over 40 years ago, gold peaked at around $850 an ounce. In over 42 years, gold has increased less than 2.5 times. Inflation went up 3.7 times, and gold went up under 2.5 times. So, is gold really a good inflation hedge? History has provided the answer to this question, a resounding no. Fear not, there is a tool in the investment toolbox to combat inflation, and that is stocks. Looking at the same time period, the S&P 500 had an increase of over 40 times. To achieve this awesome growth rate, you did not have to do anything other than stay invested. And believe me, from 1980 to early 2022, there were a lot of reasons not to stay invested, from severe recessions and hyperinflation to war, acts of terrorism, and a global pandemic. Stocks behave in a volatile way, and they carry more risks than other investments. They are not right for every situation or every investor. For those investors that feel comfortable having a part of their portfolio in stocks and can be steadfast and stay invested through the long term, through good times and bad, they have been rewarded with a rate of return that has crushed the rate of inflation. The greatest long-term inflation hedge is equities. Your best tool to combat inflation is a diversified stock portfolio. This time is not different. Do not let the volatility of the markets get you down.